Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Doug Foreman, Chief Investment Officer of Kayne Anderson Rudnick, with his 2021 outlook for value and growth as well as the economy. Doug, it's great to see you again. Welcome back to Trade Talks.
Well, thanks for having me, Jill.
You got it. And as we close the chapter on 2020, what's your 2021 outlook for value and growth?
Well, I'm favorably disposed towards both as we go forward. I think the economy is starting to recover, but it's still obviously not anywhere close to normal. So I think what we'll see throughout 2021 is people get vaccinated and back to work eventually at some point during the course of the year. We'll see the economy start to pick up even more and maybe get back to normal by year end. And when you're in an environment where stocks where earnings are improving and the economy is improving and interest rates are relatively benign, that usually means higher stock prices for both growth and value stocks.
Longer term, what are some of the trends that you're watching? A lot of these stocks that are within the growth space really did lead the way in terms of the market recovery anyway.
Yeah, I mean, the growth stocks really held in there much, much better than value stocks because a lot of value stocks are like high fixed cost businesses that are person to person. They need people to come on board their cruises or their airplanes or stay in their hotels. And they burn a lot of cash when revenues don't materialize because they have a lot of fixed costs that they can't do anything about, like rent and employees to some extent in the short run. Whereas some of the growth stocks, particularly the technology area, where they're able to work from home and operate remotely, and people are still spending and becoming more digitally enabled in their businesses. And throughout this COVID crisis, it's been more important than ever to be able to reach clients remotely as opposed to person. So that's really placed the growth stocks in a very good position this year.
What are your thoughts around work from home versus the fixed costs that impact businesses? Because for people like you and I are fortunate enough to be in financial services or the fintech space and technology overall, we can work from home. We haven't been impacted, relative to others that don't have this luxury. And I would imagine that some businesses are going to start to rethink their costs if they know that a lot of workers either want to have some sort of hybrid role or continue working virtually.
Yeah, I think the longer term implications of this really aren't clear, at least to us yet, and time will tell on this. But I do think businesses have learned that they're going to have to be more flexible with their workforce on a go forward basis, both in terms of the hours they work, where they work, and how many days a week they work, et cetera. And I don't think that's necessarily negative. I mean, technology has enabled this to occur. If this had happened 10 years ago, all of us would have had trouble. But the technology that's available today, the ease of things like this, the Zoom call, et cetera, really didn't exist 5 or even 10 years ago. They do exist today, and I think that's enabled people to rethink how they deploy their workforce in a more flexible and maybe cost-efficient way. So time will tell, but I think at the end of the day, it's going to be nothing but good, hopefully, for the employee and the business.
And you had touched on this earlier in the interview, but speaking of economic activity, getting back to normal in 2021, it seems as if it's going to take some time for it to, the vaccination to trickle through our population and people's willingness and want to get back out there. It's really interesting when you think of it in that respect. It was relatively easy for us to pivot and go to our individual homes, but it's something else when, okay, let's say it's the end of June and most of us are vaccinated or whatever, to go back into the cities or go back to work. It seems as if the logistics for that have to be thought about too.
Yeah, I mean, the market's not going to wait until the needle's in everybody's arm and everybody's feeling good and everything's vaccinated. The market, as you know, is always discounting way in advance of what's actually happening in the real world. So as long as the market can see a clear path to where the future lies, and this vaccination, efficacy that we've seen in numerous drug companies now really should give the market a lot of confidence that things are going to incrementally continue to get better. The rate of that, how that happens, when it gets back to full capacity, it remains to be seen, whether it's the end of 2021 or 22. And certainly certain hard-hit industries like airlines, they could take several years to get back to normal for sure. So, but the trend and the second derivative, the change, is what really matters to markets. Are things getting better? Yes or no? And all I'm saying is I think 2021 will be a year where incrementally things every month will get better. And there'll be hiccups along the way and logistics issues, I'm sure, with the deployment of vaccines. And, the 6 o'clock news will be running stories on the few people that have allergic reactions and all that stuff. But the reality is, as long as things overall are getting better every single month, and keep in mind, you're coming up against comparisons in the first half of the year, at least, where, you had 6.5 billion people sitting at home most of the time doing nothing for several months. I mean, absolutely nothing, zero economic activity. So I think it's going to look like the economy is really strong in reality as 2021 unfolds. And part of it's just because of easy comparisons and where we're starting from. But I think that second derivative is way more important than absolute numbers, and always is in the market.
All right, Doug, great to catch up with you as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.